Hey everyone, welcome back to Corporate Decoder, the place where we decode the dramas and the dollar signs hidden in corporate reports. Alright, get ready because today we are diving into BPGC Acquisition Corp's latest annual report, a document thicker than my grandma's fruitcake and packed with more twists than a soap opera. Let's just say recovering from market volatility and facing down to listing is just the appetizer here. BPGC Acquisition Corp, formerly known as Ross Acquisition Corp to sue, is basically a special purpose acquisition company often called a SPAC. Their whole game is to merge with another company and take it public, but lately things have been a bit bumpy to say the least. They've been struggling to meet filing deadlines and their stock got delisted from the New York Stock Exchange. That is a big deal, folks. It means it is much harder for investors to buy and sell their shares, and it definitely raises some eyebrows. Now let's get to the juicy part, the financials, especially when it comes to those Class A ordinary shares. They have the potential to be redeemed, which means shareholders could get their money back as of the 30th of June 2025. These shares were valued at around $11.19 each, and there were about 174,000 of them. That sounds decent, but remember that redemption feature can make things complicated for future business deals. And speaking of deals, the money they set aside for it, the trust account is looking a lot thinner than it used to be as of the 30th of June 2025. There was only about $1.8 million left in there compared to over $55 million back in December 2023. That is a massive drop, and it really shows how much cash has been paid out to shareholders who chose to redeem their shares. Then we have these derivative warrant liabilities, which sounds super complicated, but basically it is about the financial value of the warrants they've issued. If the company's stock price goes up, these liabilities can get really expensive for the company. On the 30th of June 2025, these warrant liabilities jumped to over $7 million, a huge increase from about $1.8 million just a few months prior. That increase in liability adds a significant drag on their financial results. Looking at their bills, their accounts payable were quite high at over $1.2 million as of the 30th of June 2025, and another $1.6 million in accrued expenses. This means they owe a lot of money to various people and businesses, and with their current limited cash, it is a situation that needs close watching. The biggest story here is their struggle to find a business to acquire. The company had a deadline to do this, and then they kept extending it, which usually means they are having trouble finding a good match or getting the deal done on time. They did announce a potential merger with iRocket Technologies Inc., but the entire SPAC world is fraught with peril, and these deals can fall apart easily. The company itself has some major risks, it is admitted. It has a material weakness in its internal controls over financial reporting, essentially meaning their accounting processes are not as robust as they should be. This can lead to inaccurate financial reporting and erode investor trust, plus the fact that they are not current with their SEC filings is a huge red flag, making it hard for them to raise more money and potentially facing regulatory penalties. The delisting from the NYSE is another major blow at sea. VEV really hurts the liquidity of their shares, meaning fewer people can buy or sell them. And this often leads to a drop in stock price and increased volatility. It is a downward spiral that is hard to escape, and they are not even trading on over-the-counter markets right now, which is even worse now for a Warren Buffett style take on BPGC Acquisition Corp. Or rather, what is left of it. They are essentially running on fumes and hoping to pull off a miracle merger. The soaring warrant liabilities and the dwindling cash and trust are massive red flags. The fact that they are delisted and can't even trade on over-the-counter markets is a sign of severe distress. Add to that the admitted weakness in internal controls. Picture becomes quite grim. The proposed merger with iRocket might offer a lifeline, but SPAC mergers are notoriously difficult to complete successfully, and the path forward is extremely uncertain. The company's direction is unclear, hampered by its own financial and regulatory struggles. In conclusion, BPGC Acquisition Corp is in a very precarious position. Their future hinges entirely on the success of the iRocket merger, which is far from guaranteed. The risks are substantial and the financial health is questionable. Unless something radically changes, I'd be very cautious about any investment here. Alright, that is our deep dive into BPGC Acquisition Corp's latest filing. What is your take on their situation? Are they cooked? Ed, or is there a chance for a comeback? Let us know in the comments if you found this breakdown helpful. Please hit that thumbs up and subscribe for more corporate decoding adventures. And don't forget to join our Discord community linked in the description below to keep the conversation going. Thanks for watching and see you next time.